Yeah, welcome back to the RS Exchange. Now, the global financial markets were rattled on Monday as the U.S. President Donald Trump opened salvos of tariffs on Canada, Mexico, and China. Today, global stocks and other markets are recovering and even advancing, such as the GSE main index in South Africa, up a roaring 1.13%. Let's bring on Chukwu, a market professional and the group CEO at Carry Asset Management, to discuss this trading Trump for frontier investors. It's great having you on the RS Exchange tonight from our studios in Abuja.
Thank you, Bossy, for having me.
Watching Trump, what do you make of President Trump's latest round of trade tariff salvos being fired and his raft of executive orders?
Well, Bossy, they are in tandem with the expectations I have of Mr. Trump. I mean, I followed him through his first time in office. I followed through his campaign, and he made promises. We followed through his Twitter handle, and they are all consistent with his personality. Everybody who had been a close observer of the U.S. president would have expected that we're going to see, and he had threatened that he was going to sign how many numbers of, I think, about 100 executive order in the phase of his resumption of office, his second term as president. He had threatened that he was going to impose tariff on Mexico, Canada, and China. He had threatened that he was going to take over the Panama Canal. He had threatened that he was going to take over Greenland. And these are all threats, and interestingly, he's also implementing those threats. I mean, he imposed sanctions on import duties on imports from Canada and Mexico and China, and both countries threatening to retaliate. The European Union is preparing to also counter any threat of sanctions or duties on their imports. So the reality is that it was most expected, but the implication of these things are just beginning to drive home.
Yes,
that's we are seeing. We now begin to measure what could happen.
Yes, yes. The campaign trail was very, very hot. So now the reality is here. How do you think frontier market investors should trade Trump's tariff war and other foreign policy speech and actions so far? How should we trade it?
Okay, I think I'll first start by speaking on what I think will happen because of those tariffs. You're going to see generally across the world increase in cost of goods and services, principally because countries are going to be more nationalistic. They're going to focus on producing what they may not have ordinarily produced if we're going to go focus on the principle of comparative advantage. So we're going to see a nationalistic approach across the world. We saw Germany parliament voting to further restrict immigration. So what we're going to see is that when countries begin to produce goods that they cannot produce efficiently, you're going to see costs increase. So for frontier economies, for emerging economies, for countries like ours that are largely import dependent, we are going to see our import costs increase, quality will decline across the world. And in terms of funding costs, it depends on how Trump funds his expected deficit, increase in deficit in U.S. Treasury. U.S. President has said that he's going to reduce taxes, both household taxes, that is personal income taxes and corporate taxes. If he does that, you're going to see a significant increase in the U.S. deficit, budget deficit, which has to be funded. The funding could actually come from the U.S. issuing treasury bills, treasury instruments, and borrowing from the public. But that will be constrained by his nationalistic approach. But countries like China that used to invest a lot in U.S. treasuries may hold back. If they are unable to raise funding from issuers of bills, then he will resort to the U.S. Federal Reserve Bank to print dollar. And that will increase liquidity of dollar in the global economy, reduce interest rates, and hopefully drive funding into emerging economies. So it depends on how this is done. But if he has to raise treasury bills, if he has to borrow from the public, then interest rates are going to go up, and then emerging economies like us will find it difficult to borrow because cost of borrowing will also increase. But two things that will happen. Trump is going to distort the global financial system by his tax policies and his tariff policies. Trump is going to distort world trade, global trade, leading to a reduction in global trade. And like Dr. Ngozi Okonjo-Iweala said, we may see a decline about 6% in global GDP. And that, most importantly, you're going to see an increase in cost of goods produced elsewhere in the world. So as it relates to Nigeria again, energy energy, we also need to bear in mind that Trump is pushing for lower energy costs, and that means he's pushing for higher increase in crude production, which will negatively affect us because we are not able to ratchet up our crude production easily. Whereas crude prices are going to drop. We've seen a drop from about $79 per barrel when he came on in office on 28th to about $76 per barrel for Brent crude, which are major export category.
Yes, so I'm sure if we talk to anyone on the street in Nigeria, for example, the first thing will be what happens to exchange rate. So I'm sure currencies will be with the dollar being in everyone's forecast. So that's one. Interest rate, another thing. So I look at the last 2 days sessions on the FMDQ. We've done roughly 700 billion naira. Investors piling triple digit in billions of naira into fixed income. Is this a fear factor?
Well, it's not just the fear factor. A couple of things, because a lot of things have to do with the domestic economy. If you look at most publicly quoted companies, a number of publicly quoted companies have actually published their unedited full-year reports. And if you look at return on the equity, they range between 7% and 12%. It's only one instance we saw a return on equity above 20%. So what investors are looking at today, Treasury bills yield, Treasury bills is coming at auction rate of about 22.6%, 22.8% for 364-day instruments. So investors are looking at now, if I expect return on equity about less than 20%, so what would be the dividend yield? What would be the return on my investment dividend yield? So it's likely going to be far below the return on fixed income instruments. That's why investors are shifting into fixed income instruments. We have to bear that in mind. I don't think it has to do with Trump. It has to do with our domestic market environment. So
the domestic environment has a lot of local players. So that's some good news. But when you look at exchange rate factor with the dollar getting back some of his firepower due to Trump's latest actions and all of that, still early days, as it were, what would that mean for Nigeria-dollar relationship?
Well, unfortunately, our dollar relationship has always, our terms of trade has always been weak because we are not in a position to negotiate the price we sell our products. It's internationally determined, whereas our import are dependent on the cost and other variables of those exporting countries. So for us as a country, what we have to bear in mind, like I said earlier, is that crude production is likely going to increase across the world. Trump has said that he's going to incentivize additional crude production in the U.S. Trump has said he's going to disrupt or encourage Saudi Arabia to produce more crude. And we know that Saudi Arabia is the only country that has the capacity to quickly increase crude production. So if that happens and we're not able to increase our crude production, it then means that we're going to deal with a lower crude price without possibly taking advantage of increase in crude price. So our foreign exchange earnings will decline. If that happens, our exchange rate will come under pressure because crude still remains our major export commodity. So that's where the challenge is going to come from, that Trump driving increase in crude production to drive down cost of crude, given that Nigeria does not have capacity to quickly increase crude production, then we're going to see a negative variance in volume because we are not going to see volume. Even if you don't have a variance in volume, but you're going to see a negative variance in price, which will negatively affect our foreign exchange earnings and therefore put pressure on our exchange rate. So all things being equal, unless we further diversify our export commodities away from crude, our currency is going to come under pressure. Of course, there are ways the central bank can counter that. Central bank can issue money market instruments like treasury bills at very high rates to incentivize short-term portfolio investors that have voracious appetite for risk. And that will give us some little, be a stopgap arrangement, but it is not an enduring strategy that will ensure that we sustain strong currency exchange rate.
Very interesting conversation with you as always. Thank you for your time on the RS Exchange tonight. Sir, do have a great evening. Johnson Chukwu, licensed dealer and CEO, Group CEO at Carrier Asset Management. Thank you very much, sir. We appreciate it.